Hello, I'm Marcus Brix with the CattleFax Closing Bell. Today's Closing Bell is sponsored by Verbac. Give your cattle platinum protection. Learn more at us.verbac.com. Crude oil futures are settling into their highest weekly closing price since January after renewed geopolitical risk premium sent the market higher, giving back nearly half a year of downtrending values. Spot market WTI crude will finish this week back on top of its 100-week moving average, something that's only happened 9 weeks since the start of 2024, contrasting the short-term risk against the softer long-run fundamentals. The spike in volatility came on June 13th after Israeli forces attacked Iranian nuclear sites with airstrikes and also eliminated some high-ranking military and security advisors. July contract WTI crude opened last week at $64.80 per barrel and finished more than $8 higher, closing at $72.98 on Friday. Prices were less jumpy this week, but remain elevated while the market awaits further developments. The role of the futures market is to immediately adjust price based on anticipated supply and demand. From a historical perspective, Iran is obviously a major oil producer, but their supply is less relevant to global output today than ever before. When the oil crisis struck in 1973, Iran was contributing 11.6% of global oil output. Post-pandemic, Iran has consistently contributed less than 5% of total global output, even after growing production back above 4 million barrels per day in 2025. According to Reuters reports, Iranian oil exports have collapsed to roughly 10% of their recent capacity, falling to around 100,000 barrels per day in the past few weeks. This type of supply adjustment explains the dramatic move in oil and suggests further upside moves will be limited unless the situation gets worse. Clear escalations in this conflict would come in the form of Israel committing strikes against Iranian oil production sites, or if the U.S. military becomes involved beyond a diplomatic capacity. On Thursday, the Trump administration committed to a 2-week window to decide whether or not U.S. military intervention is justified. This decision will determine whether oil prices need to move higher in the coming weeks or if the risk premium can be slowly boiled out of the market. Thanks for watching. Remember to visit CattleFax.com to become a member, see the latest market news and analysis.